Okay, good morning. I guess Jesper really woke you up in a Friday morning. I'm Oki Matsumoto. I'm a founder and the executive chairman of Monex Group, which does the lots of online financial businesses in Japan, as well as I am the member of the TSE's committee, which been discussing that the PBR, revitalization and all kinds of those reforms at the TSE. And also, I am the chairman of Japan Catalyst and the CIO of the Japan Catalyst Inc. Does manage the Monex Activist Fund, and also I am CIO of the Japan Catalyst Fund as well. Now, I believe that Japan is different now. Japan is changing now, and you may be filling up with hearing that well, this time Japan is different. This time Japan is changing, and then in many cases in the past it didn't change. Okay, but this time it's changing. Why? Well, maybe because of inflation. Jesper said that the capex in Japan is still very low, but with now finally even in Japan inflation is coming. That is kind of pushing the corporations to remobilize the capital and the cash. So that may be one. The China, Russia, there are lots of threats to imminent threats to Japan. So that may be working as a kind of wake-up call to Japanese society and the company. So that may be one reason. Kishida, I'm not sure. but he's doing actually. If you look at what he's doing very carefully and it's actually he's doing he is executing many things. At least that the government is very functioning, not like one government you know very well. And the corporate governance reform, Japan's been working on that for years, and so that may be accumulating some good ingredients for Japan to change. The stewardship code and the responsible investment, all those kind of things. So there are many things Japan's been working on, but I think this time it's really essentially different, which is like TSE, which Mr. Ao, the senior executive officer of Tokyo Stock Exchange, is going to talk about. But TSE this time is really different. I've been on the board of. I used to be on the board of TSE for 5 years, and I've been always on the committees of TSE for last maybe 20 or 25 years. So I've been watching TSE very carefully, closely, but this time they are very different. I think including that, what is really making this, Japan is different this time is, I think it's a generation change. This is, first of all, the average age of the CEO of Japan, Japanese companies, is now around 59. 60 years old. I am 59 years old. So I am the kind of stereotype of the Japanese CEO now. So this is their history, and it's my history too. I'm born in 1963, and up until I started working, Japan enjoyed the golden age. But after I started working, Japan's been always drifting down. I never saw the success experience of Japan in Showa era. My seniors, they saw a huge success experience. After World War II, from a completely devastated nation, it took only 23 years for Japan to become worldwide GDP number 2. Okay, but the Nikkei Nikkei hit the peak in 1989, but as regards society or economy in 1987, it is already behind the peak, beyond the peak. Okay, so after I started working, Japan didn't do anything good. Japan was always struggling. So I didn't see any success experience. It means my peer CEOs, they didn't see the Japanese success. So we've been always more open-minded to the global best practices or global standards. But our seniors were different. They were bound to the success experience in Japan. So while my generation always been thinking we should change, our seniors didn't believe they need to change. So that was a really, and then now the generation is, the power is drifting down to my generation and younger. So that is really the big difference of Japan now. In the golden age, it's not only a generational success experience, but also as regards governance, as regards the power to force companies or society to reallocate resources. Used to be Zaibatsu. Zaibatsu, really acted very, proactively to reallocate resources among the member companies. But the Zaibatsu was, destroyed by GHQ, and then METI took it over, Ministry of Economy, Trade and Industry. So they were really, act very deep to reallocate, to force many Japanese companies to get merged, consolidated, or get out of this business and start doing this business. METI was really the huge kind of, in a sense, activist of Japanese corporations, but they got taken out. Maybe by USTR, I don't know, but they were taken out. And then the debt governance, the mega banks, big banks, acted as like a Zaibatsu. They were really, forcing, they were really reallocating, ordering the member companies inside like a Sumitomo Group or Mitsubishi Group, or doing a reallocation of the resources among the companies. But again, the banks was taken out. They were told that you are doing too much, so they've been taken out. So when the bubble was bursting, or when bubble bursted, we lost the governance. METI is gone from the picture, and the big banks are gone from the picture. Okay, while management still stick to the old Japanese style with the success experience, we didn't have the governance to reallocate the resources. Oh, okay, and then after that, we started searching for the new models, and also the Japan started doing lots of governance reform, including like corporate governance code, as well as stewardship code introduction. But that was kind of still we are kind of searching for a new model. And then now the management, it's not just in the private sector. It's in the bureaucracy as well. It's in TSE as well. The generation changed. It's my generation and younger. So we are naturally more open-minded to the global best practices. And also, after METI, after banks, after no one, now the equity governance is back. It's not only activists, but also all kind of shareholders. I think we're going to discuss that later. Even Japanese institutional investors, now they are voting. They have more say to the management. It's very different from the past. And the retail investors now voting. When some particular cases, when the activist support the support ratio for the activist proposal was say 45%, and now it is 52%. It's coming from the Japanese institutional investors as well as Japanese retail investors. They are voting. So that is very different. And also, here comes TSE. TSE did a very, I'm a part of that committee, but TSE is now really, steering lots of changes in Japanese corporate market. And also pandemic did actually a very unique thing, I believe, to Japan. So as I said, the generation changing, and my seniors have got the success experience. I don't. the powers coming to my generation, it's good, but up until recently, those senior people who could be, former CEO, former CEO, who may be the one who hired my generation, they still come to the office every day. The same floor as a management, as a senior advisor. But the COVID pandemic put them out. And now they are not coming back. Okay, so that put the kind of over casting kind of a thing gone. So now we are more free. So Japanese, there are many companies. That there are many companies who's got great business, but something bad business too. Great business, but too much of cash. Great business, but original business of the company is not making money. But they say, wow, but we can stop it because this is a original business, founding business of the company. So Japanese management's been bound by historical contexts. But now they're becoming free. As I said, all those people gone, and also because of the inflation and because of the accumulation of the corporate governance restructuring, and also the very apparent, explicit push from TSE. So those things are really changing Japan right now. Okay? So now I believe Japan is really, really changing. Now let me introduce Mr. Ao, who is a main driver of the TSE's council to reform the TSE's in all those rules. Mr. Ao, as Margaret said, it's now 2 a.m. in Japan. So you can see how TSE is committed to this. So Mr. Ao, please.
Oh, thank you for your introduction. Good morning, everyone. I'm Katsumi Ao, Senior Executive Officer in charge of listing rules at Tokyo Stock Exchange. It is an honor to be speaking to all of you with Matsumoto-san, who has been a strong partner of TSE as a leader and a valuable expert. He has contributed greatly to the development of the Japanese capital market, and I look forward to conversing with him. There are many things happening in Japan. Both domestic and foreign investors seem to share a positive outlook for the Japanese market. These changes seem to continue, so it is an interesting time to be looking at Japan. Today, let me open our discussion with what we see in the market and talk about our initiatives, such as the requests we made to listed companies at the end of March. First, what we see. This year, we saw the TOPIX and Nikkei 225 indices reaching their highest in 33 years. We see changes in the Japanese economy. Business is coming back. Inflation pressure, BOJ's monetary policy, and appreciation of Japanese yen are key factors too. Because of geopolitical situation, there is reallocation of Asia investment portfolio towards Japan. Also, with the Japanese individual tax savings account (NISA) expanded from next year, we believe Japanese retail investment flow will increase greatly. Actual shift from saving to investment might happen. Under this circumstance, JPX has been pushing for revitalization of Japanese market. Back in April 2022, TSE's cash equity market went through a major change. The new market segment, Prime, Standard, and Growth started. We introduced this framework as a kickoff to motivate the companies to grow and create an investable market that attracts investors, both domestic and foreign. In June 2022, we set up a council of market experts to follow up on the progress of the listed companies' responses. Matsumoto-san is a member of the council, and we greatly appreciate his contribution. Every month, we discuss the progress in the market and additional measures needed. Based on the discussion at the council, TSE published a roadmap of future initiatives in January. The roadmap focused on 2 points. One is the end of the grace period for the continued listing criteria. It will end in March 2025 to further facilitate the effectiveness of the platform. However, this can only affect those companies that are not meeting the listing criteria. It is crucial for all listed companies to be motivated to achieve the sustainable growth. This is the second point, and the request we made in March to the listed companies. This second point is in response to the issue that we identified, which is the problem of misalignment. Through discussion, it became clear that there was a misalignment of the perspective of investors and listed companies. We have been saying that the capital efficiency is important since 2015, when corporate governance code was introduced. However, for example, about half of prime companies are trading below book. Compared globally, the US and Europe have few companies that are trading below book. This suggests management's mindset and corporate culture needs substantive change. This is the reason we made the request in March. We called for 3 steps to be taken by all prime and standard listed companies. 1, analyze their current cost of capital at the board level. 2nd, formulate a plan for improvement. Then lastly, execute and update the plan through constructive engagement with investors. PBR is one of the examples we gave, but companies should use ROE or any other performance indicator that their shareholders use and appropriate for their business. We are not requesting for measures that have immediate effect. Rather, listed companies should look for growth opportunities and boldly reallocate their capital to such investments. Share buybacks should be considered only when compared with other investment opportunities. It is reasonable to return the capital to shareholders. Our request is not mandatory, but as you know, in Japanese culture, peer pressure and nudge are effective methods of discipline. 31% of the prime listed companies have already disclosed their initiatives or their intention to disclose. Looking more closely, we found that the 45% of the companies with more than 100 billion Japanese yen market capital that are trading below book have done the disclosure. These findings were discussed at the most recent follow-up council on August 29th, but this is still at an early stage. We plan to help the companies by following up on the company's responses and sharing investors' point of view, and good example of listed companies' disclosure, and nudge their responses. As a market operator, we provide the platform, but the main players are investors such as yourself and companies. The key to unlocking the bold movement of the listed companies is the investors' engagement. When investors approach and share how they analyze the evaluate, companies gain new insights and fresh perspective. Do actively engage in constructive dialogue and give feedback to us and the companies. Thank you for your attention.
Okay, thank you, Mr. Ao. So I'd like to take questions from audience for Mr. Ao, but before I do that, let me ask Mr. Ao two quick questions. One is that yes, with this the request from TSE about regarding that the price to book ratio, there are lots of as you know. Many companies did share buybacks and then share price went up. There's one calculation that if all Japanese companies who are trading below book, if those companies' share price goes to PBR being 1, then Nikkei index should trade something like above 39,000. But anyway, so with this PBR related initiatives, Ao-san, what kind of feedback or response did you get from issuers or investors or those people? What kind of response feedback did you get?
Okay. For the listed companies, we have been receiving many inquiries. 31% of the prime market companies have responded to our request in just 4 to 5 months. And we have many meetings with domestic and foreign investors. They are very keen to talk to us and understand our initiatives. So we see the current situation very positively. For investors, both domestic and foreign, there's much expectation that this request will push forward reforms in the companies, and management become more conscious of investors' perspective. The next step is how to actually bring about changes in the companies. We will continue to follow up on the status of disclosure and feedback from investors, and actively share those with companies. And this will raise management awareness of the need to act. Thank you.
Okay, thank you. And the other question I have is that, as I said, I have been somehow involved with the TSE for almost 2 decades, or maybe more than 2 decades. But this time, it's very different. This time, like not only this, the PBR-related initiatives, but also if the companies do not meet that improvement plan they submitted, then those companies would be moved into, how do you say in English, kanriposto, the kanriposto. Anyone know the English? It's a kind of the section in the official gazette. The official gazette. Official gazette? That doesn't exist in America. You'd be publicly shamed. So it's kind of it's labeled that this is still listed. It is still listed, but we are monitoring this company. So the companies who didn't meet those improvement plan, which they themselves submitted, if they didn't meet that plan by the end of that stated period of that plan, then they'll be moved into this criteria, which is very strong. So my question to Ao-san is, why this time TSE is different from the past?
Yes. As a market operator and one listed company, we need to change according to the economy and society change. So in that sense, we are happy to change. We need to continue to improve and make our market better. However, our role as market operator has not changed. We are a platform provider that facilitates the dialogue between the listed companies and investors. Companies need to understand the thinking of investors and shareholders. They need to speak the same language as investors to understand and know to improve. However, for effective dialogue, actually, we expect investors to take the lead and approach the companies. When shareholders and investors purposefully engage with companies and navigate the engagement, companies can learn how to improve themselves. When approached, listed companies need to be prepared to seriously engage. As a market operator, we are committed to helping the companies by providing tools and skills to be prepared. Thank you.
Thank you. Well, Ao-san is very modest, but what I see from my point of view is Ao-san is my generation. I think he is maybe 1 year or 2 years younger than me, but he is my generation. So the people in TSE working on this issue is, as I said before, my generation and younger. So they do see the needs to change. So that is really, driving this different approach and change. Now, let me take more questions for Ao-san. Yes.
Well, first off, thank you.
Can you use the microphone?
Thank you very much. I'm Quentin Hardy. I'm with Google. And thank you very much for all these presentations. They're really excellent and very enlightening and quite dramatic. What you've described is a search for a model and not arriving at a model. And my question has 2 parts. Do you think there will be a lot of experimentation among managers, or do you think there's a search for a kind of consensus around what the new model should be? And the second part is, what role do you think advanced technology, capital investment in technology like cloud computing or artificial intelligence will have in these coming changes?
Okay. Ao-san, you wanna answer this question first? Or
Sorry, we couldn't get the second. Would you mind repeating again?
can you use the microphone? Otherwise, she cannot.
The second part is around the role of advanced technology in building a new model.
How many?
So.
Hi, my name is Ayla Wagatsuma. I'm with Ao-san right now, and I'll be speaking on behalf of him. So to answer your question for the first point, I think, well, we didn't give a certain model or a specific model because we wanted the managers to actually start speaking or having a dialogue with the investors and come up with a model or whatever method that is appropriate for each of the company, depending on the company's situation. Well, we do think it's case by case, depending on their business sector or depending on what the shareholders and the investors expect of the company. So in that sense, we're not asking for a certain model to be followed or a certain model to be made in consensus, but rather have each of the company aspire appropriate model for each of the company that's appropriate for each of the company. But there might be a consensus around it, depending on what the investors and shareholders expect of the Japanese companies. In that sense, we do think using technology or any sort of new ideas, brainstorming with the shareholders, that is very much what we expect and encourage the listed companies as well as investors to take the lead on it. So we do have hope and expectation to the investors, as Ao-san said in his presentation, that with the professional eyes that investors have, we want the investors to take the lead on the dialogue and start having the conversation with the managers. I hope this answers your question.
Yeah, as far as I understand, that TSE is trying to share the good good example with the other, try to correct the good practices or good examples, so that other managers can learn, especially for the some startups or those companies. Those are the good practice from someone else is doing is good to be shared. The answering the second question, Japan is losing population, and the generative AI is really powerful. You may know that in Japan, many governmental bodies, if it's a central or regional government, really adopting GAI now, because they deal with lots of documents. Okay, so including that, there are lots of usage of GAI, or in the future maybe AGI too, in those Japanese, not only Japanese companies, but also in the governmental bodies too. They are really trying to utilize those technologies. Okay, the next question. Okay, in the back.
Question about the potential for the impact of investment by Japanese listed companies in Chinese companies. So given the current macroeconomic trends in China and in Japan, if there are Chinese state-owned enterprises or other companies in China that are looking for investment, potentially from Japan, what the impact would be on listed companies in Japan, that type of investment, and the impact on the economy and the impact on the TSE.
This may be the good question for the next part, but okay, do you want TSE to answer that question? Okay, let's ask Ao-san.
Thank you for your question. I guess from the exchange perspective, we are neutral on that part. It will be depending on the listed company's dialogue with the investors and shareholders, if whatever business model that each of the companies should be taking.
Yeah. Okay. Yes.
I'm a great reader of Leo Lewis in the Financial Times, who I think is a definitive commentator on Japanese politics and economics in Japan. In the Financial Times a couple of months ago, there was an article about the lack of later stage financing for young Japanese companies, creating in effect a donut hole where these companies go public prematurely before they're really ready in terms of earnings and revenues. And as a consequence, there's minimal liquidity in the stock market, and the managements are distracted trying to manage their public listing rather than focusing on building companies. In this respect, the relaxation of rules associated with listings in Tokyo has not been entirely constructive, if I can put it in the nicest way. Is the Tokyo Stock Exchange considering tightening its rules for the maturity of the companies that are going public, rather than allowing companies without revenues to go public and being distracted by the entire process?
Wow, this is a perfect question. どうぞお答えください。
Too much regulation is a problem. Too little regulation is also a problem.
Finding the right balance, that's our call, definitely. So thank you for your question. So the point that you made, it's a very important point, definitely in terms of how we should be encouraging the startups to use the capital market to gain access to the funds that they need and have a better growth strategy, or be able to grow and have their high potential growth really fruitilize and be realized. So in that sense, we do think that's an important point. And I guess the answer from us would be that that is definitely one of the key issue that is being discussed at the follow-up council that Matsumoto-san is on, definitely. So we are together discussing that point too. So we are discussing about how to have the growth market, which is growth market segment, which is for the startups, basically, how to have the growth market be more effective. That is the key question that is just on the agenda. We've discussed it a couple of times already on the follow-up meeting. We are going to continue to discuss it, how the market should be effective in terms of how the listing rules should be structured, how we can encourage the listed companies on the growth market to be able to have a better use of the capital market. For your point about tightening the listing criteria, to be honest, we just tightened the growth market listing criteria when we transfer from the former segment to the new segment. So we are not in sort of the idea or thinking to have the listing rules change so often. It will be sort of a disruption to the market, not good for the listed company as well as for the investors. It's confusing. So we're not ready to tighten the listing rules quite yet, but if that is what the market participants think appropriate, then that will be the direction that we'll be taking in the future, maybe. But that is something that we want to discuss at the follow-up meeting with the market experts as Matsumoto-san and other listed companies. We do have startup companies on the follow-up meeting council as a member. So I think we will have sort of what direction would be appropriate for the market to be more effective.
So we are really discussing that point right now in that follow-up council. Just like 2 weeks ago, I believe, there was that subject we discussed, and we are going to follow up. In that meeting, I, by the way, said that there is entrepreneurial finance that study in the States. How to keep motivating the entrepreneurs is it's a good study we have you have in the States that should be shared to the meeting. And also, I agree with you. It's like startups are like kids. If you help them too much, they don't grow. You have to be tough on them, otherwise they don't grow. So, but it's my one personal opinion. So we are discussing in the follow-up meeting. Now I understand that there is a question, but we have a second session as well. So you can ask a question in a second session. So let me before to end this rightly in Japanese way. This is 2 a.m. or whatever, 2:30 a.m. Ao-san showed up this call for this event. So thank you very much, Ao-san.
Thank you very much.
Yes, thank you very much, Ao-san, and your colleagues over there for staying up so early in the morning, or maybe starting your day so early in the morning. We really appreciate it here from San Francisco.